this video, I want to talk to you about dividend investing versus index fund investing. I'll cover the pros and cons of dividend investing and the pros and cons of index fund investing. Then based on those insights, I'll answer the question, are dividend stocks actually better than index funds? And at the end of this video, I'm really hoping that you will have enough foundational knowledge to choose a path that'll be best for your circumstances. And if this is your first time here, welcome. My name is David. Always remember to gently destroy that like button. And without further ado, let's go. Let's start with dividend investing. If you're not familiar with dividend investing, it really is investors choosing individual stocks that will pay a reasonable amount of dividends per year. On the pro side, dividends are cold, hard cash, which means that it will enter into the bank account. It's tangible, you can see it, you can feel it, and you can spend it. And usually those payments are pretty consistent throughout the years. And you can really anticipate around what time the company is going to pay those dividends. The transaction cost when it comes to dividend investing is usually one time. It happens at the time of purchase. When you purchase the shares, you pay transaction costs and that's about it for the costs. Of course, there is an option to opt into dividend reinvestment plans, which will ultimately forego the transaction costs, and instead of the companies paying you in cash, should be paid in shares. But the shares are also issued at a discount, which is really a win-win that you don't have to pay transaction costs and you get the shares for a cheaper price, which means that in the future, you'll be paid even more money without the transaction costs, and it's an engine that will just keep going. And the other thing also is that if you're actively choosing what dividend stock to buy in your portfolio, there is a chance that your returns overall will outperform the market. On the cons side of things, it does require a little bit more time to understand the business model, where the company stands compared to other companies, as well as its surrounding industries, as well as its surrounding companies. Because all of those things do affect the performance of the company. And if the performance of the company is impacted, it also impacts the dividends that you receive in the future. Now, the other thing when it comes to dividend investing is that it just lacks the diversification compared to index funds. And the final thing when it comes to investing in dividend stocks is that usually dividend stocks are a lot more mature. Because they're more mature, the share price won't be as volatile. So you don't really expect the share price to skyrocket like Amazon stock or Facebook stock. If you're wondering, is dividend investing a good strategy? Dividend investing is a good strategy if you're willing to put in the time to learn more about the company, the surrounding industries, and the surrounding companies that might impact the company's performance. And if you like the idea of cold hard cash entering into your bank account so that you can spend it and buy whatever you want, then yes, dividend investing is a good strategy. And if you're wondering whether dividends are taxed, I want to reiterate the point that dividends are part of your ordinary income, which means that it's more than likely that you're going to get taxed on that. Now in Australia, we have something called franking credits, which allows the company to pass on the tax that they already paid on those dividends to us. That effectively reduces our ordinary income. Of course, there's different ways where you can minimize the tax expenses by receiving the dividends in a different environment.
I don't mean routing the money to Cayman Islands.
I am really referring to receiving the income in superannuation or 401k or Roth IRA if you're in the US. But the best thing to do is actually speak to a professional if you do want to go down the route of dividend investing and see how you can potentially minimize your tax expenses. All right, so let's talk about index fund investing. Now, when it comes to index fund investing, ultimately what you're really looking for is that instead of picking individual stocks that will pay you a very steady stream of income, you just buy everything in the market. Now, the pros when it comes to doing that is that it's simple. There's not much time that's required on your end to actually think about what companies to invest in. And on top of that, it's very cheap access to a huge amount of diversification. Because if you think about buying an index fund, everything in the market, you're buying some in resources, some in tech, you're ultimately achieving a level of diversification that will be very hard to achieve with dividend stocks. And the best thing also when it comes to index fund investing is that over the long term, it's likely that you are going to outperform majority of individual investors who are picking out individual stocks to go into their portfolio. But of course, it does come with some cons too. Now, the cost of investing in index funds is ongoing. It's not a one-time fee. There is a management fee per year. So every year, it's around the same amount. Whereas for a dividend stock, it's basically at the time of purchase and that's it. And the returns of the index funds is not cold hard cash. You will only realize your return after you've sold some of your index fund shares. And even though index funds will pay dividends, it's just gonna be nowhere near if you were to choose individual dividend stocks. So index funds are a good investment if you're just not really interested in learning more about the financial markets. You wanna keep things really simple, and you want the high probability of you outperforming majority of individual investors who are actively choosing what stock is going into their portfolio. Okay, so I do want to make a note here that when it comes to dividend investing, depending on what country's index you are buying, you really have different properties. So let me explain. When it comes to buying the S&P 500, you realize that majority of the top companies are tech companies. So they don't really yield a lot of dividends, but they are high growth. Whereas if you look at the ASX 200, which is the top 200 companies in Australia, they're mostly financial services, resource companies, not really high growth, but higher dividend yields. So if you look at the S&P 500, the dividend yield on average is about 1.85%. Whereas for Australia, the ASX 200, the dividend yield is about 4.4%. So given those are the pros and cons of both dividend investing and index fund investing, this is one of the final questions that we have to ask ourselves. Are dividend stocks better than index funds? In order to judge that, I'm going to use 3 criteria: time, cost, and returns. Time is essentially the time required from your side to invest in that asset. Cost is the cost of investing into that asset. And returns is how fast can you build wealth. Now, from a time perspective, if you do choose to go down the dividend investing route, you do need to invest a good amount of time to understand the business model, the competitive landscapes, and the businesses who might be potentially competing with the company that you're potentially investing in. Company performance are directly tied to a company's ability to pay you dividends. Now, if their performance is impacted, of course, your dividends will be slashed. Now, whereas for index funds, you're buying the entire market. The amount of time you do need to put into investing in that asset is comparatively a lot smaller compared to investing in dividend shares. But I do want to point out that for the people who really enjoy learning about business models, competitive landscapes, and industries as a general, it's not really time wasted. They probably enjoy that so much that they will do it anyway. So I'm going to give this one a draw between index funds and dividend stocks. Now, from a cost perspective, assuming that you're going to buy and hold over the long term, transaction cost for dividend investing only happens one time, and it's usually at the time of purchasing those dividend stocks. And of course, every time you buy more dividend stocks, you have to pay for it in transaction fees. But if you opt into dividend reinvestment programs, then yes, some of the transaction fees will be waived. Whereas for index funds, on the other hand, management fees are ongoing and it's every year. As controversial as that sounds, I'm gonna give this point to dividend stocks, but barely, because the management fees on majority of the index funds are usually very low, even though it is ongoing. And the last point, which is investment returns. Now, if we're coming from the perspective of building wealth, purely investing in dividend stocks is going to take a little while to accumulate enough wealth to be financially independent, which means that the dividends that you get will cover all your expenses. And also, most of the time, dividend stocks are more mature, so the share price growth, it really isn't like Amazon, where if you invested in Amazon in 2011, you would have 10 times your money now. Whereas for index funds, depending on which country's index you're invested in, it's likely that you're going to grow your wealth significantly faster compared to just purely investing in dividend stocks. So at this point, when it comes to returns, I am going to give this one to index funds. So at 2 and 2, it's really hard to say which is better than which. But here's what I did for myself. Now, I've dedicated about 20% of my portfolio invested in index funds. And if you're curious, it's VTS. VTS is basically a Vanguard exchange traded fund that tracks the entire US market. The remaining of my portfolio is largely dedicated for Australian dividend stocks as well as other assets. Now, one of the main reasons why I've dedicated such a big portion of my portfolio towards Australian dividend stocks is because we have something called franking credits in Australia. And franking credits essentially allows the company to pass on the tax that they paid on the dividends to us, which effectively reduces our ordinary income, which means that we don't have to pay as much tax. At the same time, I just really like the idea of having cold hard cash flowing into my self, and I use index funds as a way to grow my wealth faster, but at the same time achieve a higher level of diversification. But I do want to reiterate this. Now, dividend investing is really good for people who want to learn more about business models, competitive landscapes, and where the industry is heading towards. And on top of that, it's really good for people who want cold hard cash entering into your bank account. And index funds are really good for people who just want to keep it simple and want to outperform majority of investors who's actively picking stocks into their portfolio. Now, this sounds very hypocritical because I have both, but no one said you can't have both in your investment portfolio. I like cold hard cash, but I also don't want to wait forever to be financially independent. So this is one of the reasons why I've chose 20% in US index funds, as well as a big portion of my portfolio dedicated towards Australian dividend stocks and other assets. Yes, this is a new shirt and I'm recording the ending of this video on a brand new day. Now, one of the last things I want to say when it comes to dividend investing versus index fund investing is this. There's a place for both in your portfolio if you choose to. Now, for me personally, like I said, I've dedicated 20% of my portfolio towards US index funds because I wanted the growth I wanted the share price growth. Now, the remaining of my portfolio is largely dedicated towards Australian dividend stocks, as well as alternate assets for diversification purposes. And before you go, actually, a few of you guys have asked me, who's that? And I don't really have a name for him yet. So if you have any suggestion what we should name him, let me know in the comments below. And as usual, you can support me by gently destroy that like button, subscribe to my channel, click onto the bell so that when I release a brand new video, you'll be the first one to know. And I also want to say thank you so much for watching this video all the way to the end. It means a lot to me and it keeps me going, creating more videos like these for you guys. And until next time, see you soon.